In a bullish sign for India's economy, the government says tax collections under the Goods and Services Tax, or GST, remain strong despite a major rate cut. According to the latest figures, the center expects only a marginal shortfall from its next year budget targets, and there's optimism about October numbers as well. On September 22nd, the government implemented sweeping structural reforms to GST regime, cutting rates on around 99% of taxed items and simplifying the multi-layer tax structure into primarily two slabs, 5% and 18%, plus a special 40% for select items. Despite these wholesale rate cuts, the government collected 1.89 lakh crore rupees in GST for September, marking a year-on-year jump of 9.1%. Now, that robustness gives the Finance Ministry confidence that the shortfall from the 2026 budgeted GST revenues will be manageable and modest. This trend in collections is being driven by healthy domestic consumption. For example, two-wheeler sales in September reached 2.16 million units. Three-wheeler dispatches rose by 5.5% year-on-year. Passenger vehicle dispatches stood at around 372,000 units in September. On the very first day of the GST rate cuts, air conditioner sales doubled and TV sales jumped by 30 to 35%. Now, timing played a part too. The GST reforms were launched just before the festive season, helping to boost consumption, which in turn have supported tax revenue. Government officials say that while collections typically spike during festival months, the momentum is encouraging. Now, while the government acknowledges a possible shortfall and they believe it will be modest and can be compensated through higher non-tax revenues and expenditure savings, and according to economists at ICRA, the overall fiscal deficit target of 4.4% of GDP for next year remains achievable. New compliance measures are also set to come into play from November 1st, including stricter verification for GST registrations and physical checks for high-risk cases aimed at plugging revenue leakages and fake billing. However, a note of caution. Officials and analysts say once the festive season passes, collections might soften. The true trend will become clear post-December when numbers settled.